Millions of Americans are buried under student loan debt, some owing tens of thousands, others over $100,000. But here's the twist: the system that promises education for all might actually be designed to keep you paying forever. Welcome to Meta Finance Lab, where you can get more informative videos related to finance. You can subscribe to the channel for timely updates. Have you ever wondered why student debt keeps growing, even when tuition fees keep rising faster than inflation? It's not an accident. Behind the numbers, there are hidden forces and financial structures that most borrowers never see. Let's go back in time to the 1950s and 60s, when college was affordable, and student loans were almost non-existent for the average American. Back then, going to college didn't require going into decades of debt. The G-bill helped returning soldiers pay for education, and the country actually had a manageable, low-cost system for higher learning. But then something changed. In the 1970s, inflation surged, and so did college tuition. At the same time, the federal government saw a new opportunity. They could expand access to loans, fund higher education, and also generate massive revenue indirectly. This is where things start to get complicated. Who actually profits from your student loan payments? Spoiler, it's not the students. By the 1980s, student loans became big business. Private banks, backed by federal guarantees, started offering loans with high interest rates. Even if you defaulted, the government would pay the banks, leaving borrowers on the hook. Imagine a system where the bank gets paid no matter what, and you are the one facing crushing debt. Sound fair? Let's fast forward to today. Over 45 million Americans owe more than $1.7 trillion in student loans. That's trillion. With 80, the average borrower graduates with around $37,000 in debt. So, how did we get here? Why does the system keep expanding debt instead of fixing it? The answer lies in a mix of policy, greed, and psychological tricks. The government wants to ensure education is accessible, but the way loans are structured, they also ensure continuous revenue flow. Think about your own paycheck. If a portion is automatically going to your student loans, you might barely notice at first. But over 10, 20, even 30 years, that portion adds up. The financial institutions are essentially earning decades of interest on money they didn't fully risk in the first place. Now, here is a question you may not have considered. Why are student loans not dischargeable in bankruptcy? If you can't pay your credit card or medical bills, bankruptcy can give you a fresh start. But with student loans, you can be stuck paying indefinitely. That's not a coincidence, it's a design flaw, or some might say, a design feature. Let's look at some real stories. Meet Sarah, who borrowed $50,000 for a nursing degree. She's been paying for 12 years, but due to high interest rates and low starting salary, her balance barely budged. Or Jason, who owes over $120,000 after attending a private college, still struggling to buy a home. These aren't anomalies, they're the rule for millions. But it's not just individuals who lose, there's an economic ripple effect. Student debt delays home ownership, reduces consumer spending, and can even influence career choices. People take higher-paying jobs instead of following their passion, simply to manage their loans. That's a societal cost that rarely gets discussed. And yet, banks and private lenders thrive. Even the government earns billions in interest from federally guaranteed loans. If you've ever wondered who profits from this massive debt industry, the answer is clear. The system ensures lenders win, borrowers bear the cost, and the cycle continues. Now, you might be asking, is there a breaking point? Historically, massive debt accumulation leads to crises. In 2008, we saw how mortgage debt triggered a global recession. Could student loan debt become the next financial disaster? Economists are divided, but the warning signs are there. Let's dig deeper into the mechanics. Federal student loans often have variable interest rates and compounding interest. Even if you make regular payments, the interest can outpace your principal reduction. That's why paying off loans early can feel like trying to empty a bathtub while the faucet is running. Private loans are even worse. No fixed rates, no forgiveness programs, and sometimes hidden fees. If you default, the penalties can skyrocket your debt by thousands overnight. And unlike other debts, there's almost no escape route. Here's another shocking fact. Some colleges inflate tuition knowing students will take loans to cover costs. This creates a feedback loop: more loans fund higher tuition, which generates even more debt. And students, motivated by promises of a better future, continue borrowing without realizing the long-term trap. And let's not forget student loan servicers. These companies manage the repayment process and often receive bonuses for keeping borrowers in repayment longer. In other words, they profit when you struggle. That's a conflict of interest baked into the system. Now, you may wonder, have there been attempts to fix this? Sure, income-driven repayment plans, loan forgiveness programs, and government interventions have been introduced. Some provide relief, but most have strict requirements and long waiting periods. The system often gives the illusion of help without addressing the root causes. One major twist: the government forgives certain debts occasionally, but the scale is small compared to total debt. Millions remain trapped, and each forgiveness program often comes with confusing rules and tax consequences that surprise borrowers. Let's take a historical parallel. Remember the mortgage crisis? Banks bundled risky loans into securities and sold them. Today's student debt market shows echoes of that: complex financial instruments, hidden risks, and systemic consequences. It's almost like we're repeating history. The consequences are personal and societal. Delayed life milestones, mental health stress, even political frustration. Debt shapes your life choices in ways you rarely notice until it's too late. It's not just about money, it's about freedom and opportunity. So, what can you do? First, awareness is crucial. Understand interest rates, repayment plans, and loan terms. Second, plan strategically, avoid unnecessary borrowing and seek lower-cost education options when possible. Third, advocate for systemic change, because this isn't just a personal problem, it's a policy issue. Now, imagine a world where student loans were easily dischargeable, tuition was affordable, and repayment was fair. It's not impossible, but it would require confronting entrenched interests and rethinking the entire system. That's why the story of student debt is far from over. And here's a twist that surprises many: some borrowers actually end up paying more in interest than the original loan. Yes, decades of payments can double or triple the debt. That's the trap. The loan becomes a perpetual financial anchor. Even high earners aren't immune. Doctors, lawyers, engineers all can carry substantial debt despite high salaries. And when you add life expenses, mortgages, family, emergencies, the burden is compounded. It's also worth asking, why aren't these numbers headline news? The media focuses on the economy, jobs, and inflation, but student debt quietly affects tens of millions, influencing markets, elections, and generational wealth. Here's a suspenseful thought: if the next generation continues on this path, could student debt become a permanent fixture of the American middle class, shaping financial behavior for decades? The patterns suggest it's possible unless significant reform occurs. So, what's the takeaway from all this? First, knowledge is power. Understand your loans and repayment options. Second, be strategic. Don't borrow more than necessary. Third, advocate for transparency and systemic reform. It affects everyone, not just borrowers. Finally, ask yourself this: is education a pathway to freedom or a trap? The answer may determine your financial future and the future of millions who follow. The system isn't designed to fail, it's designed to profit, often at the expense of students. Remember, student loans are more than just debt, they're a financial story, with winners and losers. The winners are clear, the losers are those who assume the system works in their favor without understanding the hidden mechanics. Don't be caught off guard. The secret of student loan debt isn't just the money, it's the structure, the rules, and the incentives that keep borrowers paying for decades. The more you know, the better equipped you are to navigate it. Meta Finance Lab brings you useful knowledge and insights to help you understand the world of finance. Subscribe to stay informed and share with others who need this information.